Hey everybody, Tom Gentile. Welcome to week 2 of our Trading Essentials webinar series. Glad to have all you guys come back here again with me. So this week we're going to focus on a couple of different things. I want to focus a little bit on spreads. I want to focus a little bit on, we'll talk a little bit about cryptocurrencies. I really want to show you what we've done with cryptos. All right, some really cool things we've done with cryptocurrencies. We've got a lot to cover tonight. I want to go back through Darknet, money calendar. We're going to go through money patterns. We're going to talk about spreads, tons of stuff that we are going to sprinkle into tonight's webinar. I think you'll find this is all really cool and will enhance your trading quite a bit. Sessions being recorded. Get the recording out to you as soon as possible. I also have some slides that I've got right now for you. If you're live, you can download the slide deck, and the slide deck talks a little bit about what we're going to cover tonight. And of course, if you have questions, you can ask questions here throughout this session. I will tell you this, there is no way I'm going to be able to answer all the questions tonight because we just have so many people that are here, just like last week. So I'll answer as many as I can. I apologize to those of you if I didn't get to your questions. Finally, the disclaimer you see on the screen. So you can read this in its entirety. You can actually pause the recording you're going to get. You can read it word for word, but a couple of points I want to make real quick. Stock and options trading has large potential rewards, but also large potential risk. The other piece I want to mention is that myself, Jay Harris, who's with me here tonight, everyone associated with Optionetics and Tom's Trading Room, we are here as your educators. All right, we're not personal investment advisors. We do not give specific trading advice. You need a broker to trade with. You must meet certain requirements, and everything I'm going to talk about tonight is in US dollars unless I note otherwise. All right, so that being said, again, welcome back. Glad to have you guys here again. If it's been a while since you've been with me, if you go to optionetics.com, this is the page you're going to see. You'll see there what we've done with platinum users. We now have what's called Tom's Option Tools. A little bit about me if you either don't know me or it's been a while since you have known me. But it's all right there, optionetics.com. Our webinar agenda this week for week 2, we're going to do a market outlook. I want to do a quick market outlook because of all the excitement that's happened in the last week. We'll do a quick review of week 1. I'm going to talk all about spreads, trading money patterns, which includes cryptocurrencies. Right, so I'm going to show you a couple of different areas that we can look at with cryptos. Next week, we're going to get into a review of tonight, also more case studies, and trading the earnings season with Delta Neutral trader Mike Wade. So let's do a quick market outlook. Now, for those of you who have our tools, all right, you will see our market outlook. By the way, this is the slide deck that I have for you. You can see that. All you got to do is download it. It's in the session tonight. But I'm going to go to tomsoptiontools.com. I'm going to log in. And what I want to show you, those of you that have our tools, and we offer a couple of different rounds. We have option trader, contrarian trader, complete trader. This is something for our partner and master traders where we put some proprietary scans in, some advanced concepts we have. But if you happen to have signed up for a trial or you're one of these 3 groups, if you notice here under the contrarian trader, we have a newsletter. Now, a newsletter is for contrarian or complete trader. And if you have clicked on that, you'll notice we have every newsletter that goes past since we've been doing them. But we put a newsletter up yesterday, talks a little bit about, what's going on in Italy and with small cap stocks. We also have some charts we put up on what I call the 4 corners. But again, you can find all this right at the newsletter, just logging into the site. We also have a free 7-day trial for any of you that have never used it before, right? You can pick whatever trial you want to, whether it's just option trader, whether it's our complete trader, whether it's the contrarian trader. Any of these give you full access for 7 days, all right? So let's get back over to market outlook. So what I did was I took the charts that we put out in yesterday's market outlook. We do our market outlook the middle of every week. As you can see here with the S&P, I want to share with you a couple of things. Number one, candlesticks, as you can see. Number two, you see some buys and sells in here. This is related to our Darknet contrarian trader. This is a signal service where we can go in and we get buy and sell signals based on channel collisions, right? Based on the fact that we see multiple channels coming together, creating buying patterns. That happened back in February when the S&P was SPY was around 260. The sell signal came in about a week and a half later at 275. That's 15 points. That's a nice move. We had a buy signal at 260 once again at the end of March. And about 2 weeks later, the sell signal came in at near 270. Let's call that about a 9 or an 8 point gain there. We've not seen anything since as far as Darknet. Darknet's very picky about how it takes its trades. It's very similar to Elliott Wave. The big difference is if you're used to Elliott Wave, the wave counts can change from time to time. Our Darknet signals never change. You get three different types. We have a buy. We also have a rebuy. That's like a second add-on. And then we have a third, which is an A or an add-on. So we have 3 levels deep that you can get into Darknet before the sell signal comes. Highly probable. We've got long-term accuracy on this around the 70% area. And as you can see here, I've written up some stuff about the S&P and how it's gotten into about a 5 to 6 point trading box. All right, moved back higher yesterday, went down again today. It's been in this up, down area. And I think we need to break the sideways channel to get any clear indication of where we're going next. The next area I like to look at is the bond market, okay? Because what I'm trying to find out is, are bonds helping to give us an idea of where the stock market is going? As you can see here too, we had, with the bond chart on its own, we had a buy signal at 118. This was back in February. We had a rebuy. That's a second signal that came in the end of February, just below 118. The sell signal came in at 120, so both of these were profitable. Here's a buy signal that occurred, and that buy signal is still in place, as you can see, right? Now, the other thing you'll notice is we got these trailing dots that are happening. This is telling us get ready because the sell might be coming. So the buy for Darknet is down here below 118. We're currently trading up above the 121 category, waiting for that sell signal to come through. Now, looking at the chart on its own, what's going on? Well, we've been in a downtrend until the last week and a half when bonds shot from around 117 up to above 122 before kind of finding an area of resistance. And so that's where we are right now. There's also a double top that's occurred as well. This big move up has really been foreign traders and foreign buyers have been coming in because of what's been going on over in Italy. And now because of trade tariffs happening in Canada and happening in the Eurozone, all right, that stock market wants to go down a little, the bond market wants to go up, even though when you look at everything, it relates to about 1% of GDP, it's still nervousness for the markets. All right, so that's the bond market. So the stock market says it wants to go a little lower. The bond market says that it wants to go just a bit higher. All right, now let's take a look at the third area, which is FXE. FXE is the currency, all right, the currency share for a euro. Now, we have been talking about this now since late last year, that we felt like the euro had pumped itself up way too far too fast with the melt up of the stock market. And then it got into its own little box between 117 and about 120 and a half. Well, that box got broken in May. In mid-April to early May, started coming down. And as you can see, it has dropped very, very quickly, right? This is an area right here where I believe buyers are stepping in, all right? We are going to create a case study looking at FXE. In fact, why wait? Let's go ahead and do it now. So I'm looking at FXE, a couple of things that I like about this. It's getting Darknet signals, but more importantly, today, it's now starting to show us the money calendar buy signals. So that tells me that now we've got two different strategies giving us the same information. So let's slide over And let's take a look. And I'm just going to go straight. I'm going to stay in the option trader category. So I'm going to go to options, going to go to option chains, and I want to put a chain in for FXE. So loading up FXE. Now, I'm not going to be taking a trade that expires tomorrow, right? What I'm going to be looking at is, and I'll go back and take a look at the chart for a moment. So the chart had a high above 120, had a low down here at 111, right? So somewhere in the neighborhood of 115 to 116 is the equilibrium level, all right? That area that we like to call the Fibonacci retracement. Also, around 115.5, we got some interesting areas of resistance, which could again be resistance. So let's look at 115.5 as our target. Now, all of our money patterns are telling us that this is likely to happen in the next 60 days. So if I've got a highly probable pattern that says we're going to go up, we're likely to go up, we've been going up more often than not between now and the end of about mid to end of July, and I'm looking at the chart that's telling me, you know what, even though we've dropped, what is it, 9 points, we could come back up 4.5 points. This could put us around 115.5. So let's use those two numbers and create a trade. All right, spot the opportunity is what we've done. Now we're going to create the low risk trade. July 20th is as far out as I can go before I get into September. So I'm going to take a look at July 20th. Let's go ahead and update that. Let's take a look at some options. Now, what you're looking at here, and let me kind of follow along with the columns. This trade area is where I put whether I'm long or short. Here's my option symbol. This is the bid, the mid price, and the ask. Then I've got time value. I've got implied volatility. I've got delta, and I've got percent to double. I've got all the key areas that I want as an options trader, as a smart options trader, to make a trade that has the best chances of working out versus anything else that's out there. So as I'm looking at this, very simply put, I can see that that I've got the most open interest over here at 117. Okay, I've got the most volume happening at 111. That implied volatilities look, they're not that far off between low and high, so there's not a real big issue with implied volatility. But I like that 111 call, so I'm going to look at that. So if I buy the 111 call, which is the July 20th, 2018 111 calls, right now they're trading around 225. Right, so what's that going to look like? That is going to look like an option that costs us $2.25 or $225 per contract to trade into. Right now, the thing is that we know what our risk is. Our risk is what we put into the trade. The risk is going to be $2.25. But what's the reward? Okay, a lot of people say reward is unlimited. The reward is unlimited until you run out of time. But even that, to me, is not a good reward. I need a real reward, an area where I would take the money off the table. Remember, I said 115.5 was what I would be interested in looking at to determine what we have here. So we're going to go down. In fact, actually, what I'm going to do is I'm going to look at, let's call it 110. And so my low end is going to be 110. My high end is going to be 115.5. Now I'm redoing the risk graph because now it's going to blow it up and it's going to show me the pertinent information. That information is if we fall down below that 111 area, what do I stand to lose? Well, I stand to lose if it happens on July 20th, the maximum amount of loss. But if it happens in the next couple weeks and I get out, I could stand to lose maybe $100 on my total $225 trade. So, you know, that's an area I'm interested in, is what happens if we go down, right? But we're starting to, it looks like, make that run up a little bit. The other important part of this is what if we're right? And if we get to 115.5 and I come across here, I can see that somewhere on this graph, I've got about a 200 and let's call it roughly $225 to $250 profit potential. Okay, so better than 100% on the risk based on the entry price. So again, the trade I'm looking at is the FXE, July 20th, 2018, 111 call or 111 call. Went out today at around 225. That was right in between the bid and the ask. This is a nice tight bid ask spread too. So this is one of the more liquid ETFs out there, and it is FXE, the currency shares ETF. All right. So that is that actually helps us on our review of call options as well. So we've done stocks, we've done bonds, we've done currencies. Let's take a look at commodities. Is it possible that we might have a bottom here as well? Yeah, it is possible. We're actually in the middle of a great energy bull, and energy stocks were due to pull back. We were looking at this last week, and USO was above 14.5, dropped down to 13.5 before rallying yesterday and then falling back a little bit today. So this is a really interesting support level right down here at 13.5. I also call this a morning star. Any of you that are candlestick traders know exactly what that is. All right. It's a 3-day morning star reversal pattern, okay, which tells us based on candlestick charting that a reversal may be in effect. All right. Now we could do the same exact thing here that we did with FXE. We could create a call option trade. Although I got to tell you, I'm not a big fan of USO, but you could look at anything out there that trades with USO. Let's take a look at one of them that got hit really hard the last couple of days, and that was Chevron. So back to our options graphs. I'm actually just going to change from FXE to CVX. CVX, and then what we're looking at here is, now remember the pattern. Those of you that were with me back in February when we talked about the oil pattern, you know who you are. We were down here, we were talking about oil. Look how far we've come, but we've pulled back. So there's possibly another leg to this, but we want to be really strict on how much we risk. So to do that, we're going to look at, first of all, remember we want to look at July again, mid-February to mid-July. That's the pattern. So let's update ourselves with the CVX trades from mid-February to mid-July. Not a lot on here, is there? I mean, I can blow this up a little bit. We can get a better look at it. This is the call side. You can see calls. Over here are the puts. I'm not bearish, so I'm going to look at calls right now. Roughly, we're trading at around 125. A really good conservative trader would go in and look at this and say, well, they first say, you know what, maybe that's not a bad idea, buying those 125 calls, because they are less than $500, for a contract. So perhaps that's a potential plan. All right, but what if we get back up here to around 130? What do we stand to gain? And of course, what do we stand to lose if we get down here below 120? So let's take a look at 115 on the downside and 130 on the upside. So 115 and 130. I do this it gives me binoculars. All right, opens up the risk graph really wide and gives me a chance to really take a good look at it. Now here's the thing. This trade's going to cost me $3.38. That's just based on the mid price. More like $3.40 when you get $3.35, $3.40 bid ask. So think of it this way, $340. How much do I stand to make if we go back up to 130? Well, if we do it tomorrow, all right, then look over here. You can see about a $336 profit. So that's almost a 1-to-1. But I'm betting it's not going to go up there tomorrow. It might take a few days. It might take a month. And if it takes a month, then if we get to that area up there, that $130 area, we might only make $216 on $338 risk. Okay, is there a better way? And that's what we're here to discuss tonight. So I'll get back to this. We're going to go look back at Chevron in just a few minutes, and I actually want to do it with another more popular stock, which is Amazon, okay, which also had a recent bullish signal for us a couple of weeks ago. We'll check in on it and see how it's doing. But again, what we did was we just simply talked about last week calls and puts, two types of options. Calls, which give you the right to buy, puts, which give you the right to sell. All right, I showed you two examples just right now using call options. All right, we weren't picking them out of thin air. We weren't doing them because we thought something was going up. All right, if there's anything you take away from from these 3 weeks, all right, that I'm doing for you, it is try as hard as you can to get away from I think it's going up, I think it's going down. All right. If you think it's going up and it goes up, stick with whatever you're doing. But thinking doesn't work for me. It's not, I can't quantitate emotion. All right. I can't qualify. I can qualify data, right? I can qualify technicals. I can even qualify fundamentals, but I can't qualify emotions. I can't qualify intuition. And therefore, if I can't qualify it, I'm not going to trade it. So tonight, what we're going to do is we're going to talk about trading spreads. And for those of you that are new to spreads, spreads are a way of I like to call playing with the big boys, allowing us to go in and do something that we just didn't think was possible before. So what are spread options and how do we trade them? So there are 2 types of spread options, right, that you're going to hear about from me: bull call spreads and bear put spreads. Now, bull call spreads involve trading more than one option simultaneously. That means what we're doing is we're actually going to be buying a call and selling a call at the same time. And the call we sell is going to help pay for the call we buy. So that what it does is it lowers the overall cost of the trade, lowers your overall risk in the trade, lowers your fluctuation, all right, from that day-to-day movement, which equally lowers your stress. Now, let's talk about a call spread. So a call spread involves buying a lower strike call and selling a higher strike call. This example, I'm using a fictional stock, XYZ. So for instance, perhaps we would be looking at buying the XYZ 100 call and paying $10 for it, and selling the XYZ 120 call, and we get $5 for it. So what we've done is we've created a spread. We paid out 10, we took in 5, so our net debit is $5. Now that's called buying the XYZ 100, 120 call spread, or being long the XYZ 100, 120 call spread for 5. So what does it look like on a risk graph? If I were to draw a risk graph with crayons, black, red, and green, it would look like this. Okay, the 100, 120 call spread for 5 would look like this. What's the worst that I could lose? Well, it's what I paid for the spread, not what I paid for the one option, that 100 call. It's what I paid for the spread. Because if the stock goes down, let's say it goes down to 50, the 100 call is worth 0, but the 120 call that I sold is also worth 0. So I'm out $5. Now, the best it could do is if we get above 120 or higher. If we get at 120 or higher on expiration day, I have the right to buy XYZ at 100, but I'm obligated to sell at 120. All right, there's a 20-point spread in between 100 and 120. If I paid $5 for that 20-point spread, I get 15 is the most I can make. So my maximum risk is $5 or $500 per contract spread. The maximum reward is 15 points or $1,500 per spread. And yes, that does equal a 3-to-1 reward to risk ratio. Now the break even is set at 105, right? This is all at expiration day, because I want you to think about this. If you paid $5 for this entire spread and XYZ on expiration day settles right at 105, your 100 call is going to be worth a minimum of 5 points. That 120 call is going to be worth 0. Now remember, you paid 10 for this. So if you bought it for 10 and you sold it for 5, you might think, well, I just lost 5 points. Yeah, you did, but you also gained 5 points, because remember, we sold the 120 calls for 5. They went down to 0. Therefore, your break even is 5 points above the buy strike. And the way you can determine break even is very, very simple. You take what you paid for the entire spread and you add it to the lower strike price, and that becomes your break even. Now, let's talk about 3 different traders. 3 different traders looking at a spread this time. But what we're going to do is we're going to look at trader A, which is a stock trader, trader B, which is the call trader, and trader C, which is the spread trader. And you'll see why I like spreads so much. So if the stock goes from 100 to 120, everybody here is going to make money. But how much are they going to make? Well, trader A, if they bought 100 shares at $100 a share, that's $10,000. Now, if the stock goes from 100 to 120, that means $2,000 went into trader A's pocket, or a 20% return. So at 120, your 10,000 becomes 12. Your reward is 2,000. For trader B buys a call for 10 points. Remember that 100 call for 10? Well, with 120, that 100 call is now up and profits by $1,000, because at 120, the 100 call is worth 20 points. If you paid 10 for it, 20 minus 10 is 10. It's $1,000 profit. What about trader C? Buys a 100-120 spread for $5. Well, here's what happens. What's the risk? 5. What's the reward? 15. We already know that because we saw it on the risk graph. A 300% return on investment. So trader C clearly had the better trade when it came to ROI. Trader A had the better trade when it came to absolute reward. But again, it's narrowed down to what are you putting up to get that reward? Trader B right in the middle. Now, what if XYZ went to 50? Now, I mentioned that earlier, so you already know that if you are a call buyer or if you are a call spread buyer, that the most you're going to risk is what you put on the trade. If Trader A bought 100 shares for $100, guess what? Trader A's just lost 50%. Trader B lost their $10. They lost 100%. But I'd rather lose 100% of 10 than 50% of 100. And I would certainly rather lose 100% of 5 rather than 100% of 10 or 50% of 100. So Trader A lost $5,000. Trader B lost $1,000. Trader C lost $500. So although we don't like losing money, you can clearly see that Trader C had a better, lower risk trade on XYZ. Now, put spreads are just like call spreads, but keep in mind they're used for bearish opportunities. That means as stocks drop, the put spread actually goes up in value. What you would do is you buy the higher strike and sell the lower strike puts using the same expiration dates on the same stock or ETF. It is a lower cost, but it offers a higher reward and a higher profit potential. So choosing the perfect spread trade, well, that has to do with going back and spotting opportunity, creating that low risk trade, and planning, executing, and managing that trade. But I'm going to show you a couple of examples here right now in this. Then we'll take a couple questions. So let's slide back over to Tom's option tools. And as you can see here, we were discussing the CVX 125 call for $3.38. There's another thing we could do. We could look at selling the 130 call perhaps. So to sell the 130 call, I'll put a -1 out there. And what I'm looking to do is I'm looking to lower the cost of my trade. And if I can lower the cost of my trade by at least a third, then I've got something worth spreading. So let's go back and look at how much. Remember, how much did the CVX call itself cost? $3.38. How much does the spread cost? This is buying the 125 call and selling the 130 call. We're actually able to do that for less than $200. So yes, we were able to reduce this down by a third. The other thing we did was we increased our profit potential. Here's how. You might say, well, wait a minute, you didn't increase your profit potential. If you get up to 130 by expiration, you're going to make $162, right? Well, that's not quite 100%. That's more like 50% return. But you can see that 50% return, right? How much does the spread trader make at expiration? Well, if we look at the spread trader at expiration, remember we're looking at 130 again. But look at that spread trader, $304 profit on the stock, all right? On a cost of what? Over here, here's your risk. Your risk is 196. You have a 155% return on investment from maximum loss to maximum profit. Okay, important to know that. So spreads can do a number of things for us. They can lower the overall cost versus calls, and definitely versus buying the stock. They can also have a much greater return on investment. And also, you know what else they do? They lower your break even. So take a look at the break evens here. We have them right here on the screen. So downside break even for the call option itself is $128.38. You got to get to 128.38 by expiration to break even. How about the spread? Well, you have to get to only 126.96. All right, a much better break even, because remember what your break even is? It's the cost of the spread, and you add that to the lower strike. So 125 plus, remember, $1.96 is 126.96, and there's your lower break even, and there's your maximum profit potential. You see that right there. All right, come down a little bit more and you can see the risk graph itself with the maximum loss, the maximum profit potential. And then we can actually even get into some other things like implied volatility graphs and how Greeks, how, like for instance, Vega in this case, it affects your position, right? I'll save that for a little bit more advanced discussion. But we have every tool here you can imagine to help you put on the right trade, okay? So that's a great way of comparing a $125 stock, which would cost me $12,500 for 100 shares of stock, or I could do $338 for the call, or I could do the entire call spread, lower my profit, my break even, lower my cost, $196. Let's do it one more time. Let's take a more popular stock. And the more popular stock I want to look at is Amazon, AMZN. Okay, so we're going to click on Amazon. And we can see some information down here, and this is the last 5 days of Amazon. If you haven't looked at Amazon, Amazon actually went up again today. So this is interesting, as the market's been kind of falling for the last 5 days. Amazon went from 1603 to 1610, 1612, 1624, 1629, and it is cruising on up the stage. All right. Now we could look at Amazon in a couple of different ways too. Let's take a look at it. So I'm going to look at Amazon out until, I could look at June 15th. That's only 2 weeks away. All right. But that's really what we're looking at for Amazon to continue to move up over the next couple of weeks. And so maybe a little too, too close for comfort for many of you. But if that's the case, go out and look at the July options. But I'm showing you the 2 week options because if you've never looked at options on Amazon before, this is going to be a fun trip. Look at the at-the-money options for Amazon, the 1630s. They're $24.25. So, I mean, first of all, you're talking $1,630 for one share of stock. All right. I mean, my limit on option trades on a per contract basis is $500. The stock is out of sight. That's $162,000, $163,000. But buying the call on its own, take a look at this. I'm going to punch a number 1 in here. I'm going to go up here and hit the risk graph. I'll blow this up so you can see it. Look at that. $2,425 for one call option. All right, that's a lot of risk. As you can see here, the 1630 call, it expires in a little more than 2 weeks. All right. Volatility is low. It's been higher, but it's low. It's because we're not in earnings season yet on Amazon. But still, this is low, guys. Imagine what these bids and offers were if we were a day before earnings. Astronomical. So you take a look at the 1630 call, you got to think, all right, do I want to spend almost $2,500 on a call option, or do I want to spend $500 on a call option? All right, I like 500. And so what we've got to do is we've got to come up with our target for Amazon, and then we can work out a spread trade. So let's just ditch that for now. Let's ditch a few more of these things. So let's go back and let's take a look at the actual, let's look at an option, a stock chart on Amazon. All right. And so instead of FXE, we're going to go into AMZN. Let's hit that chart. There's Amazon. Look at this. We are hitting all-time highs, folks. All right. Now, my target on this in the next 2 weeks is 1,700. So what we got to do is if I'm looking at this, I'm trying to create a trade with a 1,700 target on it, then I've got to figure out, okay, think about this. I tell this anecdote all the time. Where are you going, and then how do you get there? Well, where are you going on Amazon 1700? If you go to the mall, all right, for some of you, it might be clothing or accessories. For me, it's probably the Apple Store or the Tesla dealership, right? That's one of the two places I like to go if I get dragged to the mall. So if I'm going to get myself to an Apple Store or a Tesla dealership, the first thing I do is I go look at that directory and I see where I am, and then what's the quickest way, what's the shortest distance between those two boxes is a straight line, and that's the line I'm heading in. Well, I want to do that too. I want to use 1700 as my target, and I want to be closer to where we are today. All right, so I'm going to be selling that 1700. I got to buy something below it, and it's easy. I'm going to buy something below it as long as I don't go over $500 in risk. All right, that's the way that I think. So let's go look at these options again. We're looking at June options. Let's scroll it down. Let me open this up a little bit so we can all see this. All right, so 1700 right down here. All right, $3.05. I'm selling that. So you know what I'm already thinking? As long as I don't go over 8, I'm good. Look at 1680. Let's do that one. That's 605. All right, 1680, 1700. That's a 20-point spread. All right. Remember we were looking at XYZ, the 100, 120. I'm now showing you a 20-point spread that's even cheaper than that. It's real. It's not fake. All right. It's not for educational purposes. Well, all of this is for educational purposes, but we're talking about something that's real based on tonight's quotes. So you can look at the 16. Let's try. I did something wrong. You know what I did? I put something in here. I got to get rid of something here. I got to get rid of that other 1630 call. There we go. Now it's going to look good. So now I bought the lower, the 1680. I sold the higher, the 1700, $300, folks. $330 if you're looking at market price, right? Here's the best part. There's a 566% maximum reward to maximum risk. Where do we need to be? 1700 in 2 weeks. Now, I don't want a lot of you sitting here licking your chops and saying, oh, that's enough said. I'm logging off right now. See you, Tom. I'll see you next week. No, I want you to do your own homework on this. Okay, I've done mine, but I want you to do yours. And I've got spreads on Amazon that are lower than this when the stock was trading down here. Okay, and when it was trading over here in the 15s. So, I'm kind of, we've got positions that we've discussed over the last few weeks that have gone up. But my ultimate number on Amazon by the end of June's expiration, that third Friday in June, yeah, it's that's the number. 1700 is what I'm looking for. Okay, I don't think it's going to hang out there long. I hope it makes a nice slow burn up there like it's been doing the last couple weeks, and that'll do just fine. So 566% return. That's the possibility here with this one. What are we doing? We're buying the 1680 call. We're selling the 1700 call between the two of them. The 1680 costs 605. The 1700 costs 305. There you go. All right, Jay, at this point, I'm going to take some questions. What do you got?
How'd you get 1700 as the target?
That was a combination of a money calendar objective that we had a couple weeks ago, and also just looking at 1700 as a round number. They both came in really close.
Great. And you have June expiration on this spread. Tony was trying to point out earnings for Amazon are on July 25th, so that's a situation where you don't really have to worry about it if you're trading it with this tight of an expiration.
That's what makes them so cheap. That's what makes them so cheap, because if you go out past the 26th, which is after market close, then the options jump up even more in value.
Thank you. And then one guy's asking if you have any perspective on SLV. I didn't know if you wanted to get at that now or later.
I'm bearish on it right now, and I will be bearish on SLV probably over the next couple of weeks as we get into the month of June. That's my thoughts on SLV. What makes SLV turn bullish? I think if we get continued trade war talks, instead of it becoming a trade nuisance, because that's what it is right now. It's not a trade war, everyone. It's a nuisance. It's like, somebody's kicking a salt shaker in one direction, they're kicking one in another. When we start seeing things that are much larger, much heavier in terms of gross domestic product get kicked around for tariffs, that could signal a spike in precious metals. But right now, I'm not really seeing it.
All righty. And somebody's pointing out what position they have, and we really can't comment on what open positions you guys currently
That
have.
is true. We cannot. That's the part where, remember the part where I said I'm not your investment advisor, and I can't talk about specific investments for you. That's for you to decide. All right. My job here is to teach you how to do this. To teach you how to fish, and to teach you how to look at opportunities, both good and bad. And hopefully you find the bad opportunities and you say, wait a second, that's not right. All right. And you see a good opportunity, you go, okay, I get it. I understand why this spread is set up the way it is.
And then lastly, Tom, if you want to address the margin issue, somebody still thinks with the spread, you still have to have $163,000 margin.
Absolutely not. If you have to have $163,000 margin on a spread that's a debit spread, then you are with the wrong broker. Something's not right. Now, if you were selling naked puts, if you were maybe doing covered calls on margin, if you were doing anything that was on the sell side, yes, margin would be a factor. But this is a buy side option. The only way this gets crazy is if you hang on to it after expiration date, meaning that it converts itself into stock. Then you'll get a phone call from your broker or an email. All right. Until then, it should be no more cost or no more risk than the actual cost of the trade. Okay. So
that'll do it.
We've been talking about, yeah, thank you. We've been talking about spotting opportunity, creating low risk trades, planning, executing, and managing those trades. And so I want to go through with you a little bit more. We talked about Darknet. Let's go take a look and see what's going on with Darknet and see how it relates to calls and call spreads. So that's really what I want to do with you now. So we'll go back over to Tom's tools. And I'm going to go into the contrarian trader. I'm going to click on Darknet analysis. And, I saw this at the end of the day, and it hasn't changed. We got a lot. Look at the buy signals that came in today. FXB, which is the British pound. We've got some ultra shorts, a lot of ultra shorts. Corning is on here. Best Buy, Allergan, Goodyear Tire. You know what I'm going to do? I need to make this a smaller list. So I'm going to go from Darknet. I'm going to make this a much smaller list. We can go to the S&P 500 stocks and search and see what pops up. All right, now I only have 11 stocks. This is better, right? This is a much better list. Now, ECL, I see over here what my type is. My types are going to be B, R, and A in that order. B is the first buy, R is the second, and A is the third. What I'm looking for is I'm looking for stocks that are not fallout stocks, okay? So let's take a look at ECL once again. That is not a fallout stock, all right? That's a good looking stock. Now, does it have, because I've never heard of Eco Labs or I haven't traded it before, does it have some decent slippage? As long as it's below 1.0 and it's at 0.4, that's fine. All of these on here are at 1.0 or better. But if you want the best of the best, this is what you do. 0.2. 0.2, then run your search. Look what's going to happen now. 2 of them. Now I've taken my big list down to just a few opportunities. Corning. Now Corning is interesting because it does look like it's dropped off, but it's actually bottom, bottom, bottom. This is more aggressive. I would take the area down here just below 26, around 26. That'd be a stop. But you got a buy opportunity happening here. And look what happened the last time they had a buy and a sell, 2-point move, a buy and a sell, about a little more than half a point move. So it does have some nice potentials there. Okay. Also, look at FITB. I almost thought that was Fitbit for a minute. Fifth Third Bank Corp. All right, banks got slaughtered and have been getting slaughtered the last couple of weeks. But now Fifth Third has a buy signal that came in, and it also has, look at this, it has some support. garnishing with it too. So it's not the worst chart in the world, obviously not the best. If you look down here, you can see our stocks in the list with Darknet stop signals. Let's just take a look at them real quick. So here's Qualcomm, showing Qualcomm that had the last trade which was an A, an add-on. That add-on actually worked out real well. The R and the B, well, when we came back, yep, they lost by about 4 points, but the add-on made 2, 4, 6, 8, almost 10 points to help counteract the 4-point losses that happened here. All right. What else do we have? John Deere. Let's take a look at John Deere. John Deere had a buy signal right down here, just around the 1st of May. Look at the sell signal came in today. So that went from 135 to 155. That was a 20-point move in John Deere. Beautiful move in John Deere. And then we've got PepsiCo. Take a look at PepsiCo. So PepsiCo was another one of those BRB or BRAs. I don't like stocks that drop to new lows. But in this case, you can see here the third leg made money. The second leg broke even. The first leg lost money. So that looks like a wash. All right. And then finally, there is AT&T. I haven't looked at this one. All right. Well, there's good reason why. There was an R and an S, which actually worked out. Here's a B at around 34.5. Here's the next rebuy at 32 and the sell at 32.5. So that didn't work out so well either. But keep in mind also it dropped to new lows. Okay. So as you can see here, overall, Darknet continues to pull its weight. Not 100%, but again, I've said this before, nothing is. And then that moved me into the money calendar. Now, this is the money calendar for June. And we look at the money calendar for June. I want to show you June because here we are on the final day of May. And look what ends up happening. We get a little wishy-washy for a few weeks. Got a couple of nice patterns in here on the 5th and 6th, a couple bullish patterns on the 13th, 14th, and 15th. The 15th, by the way, is the 3rd Friday of the month. Look what happens on the 22nd. We start going green, 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 and it actually goes green into July as well. So I'm kind of sitting on the sidelines. If I have bullish chips in my hand, I'm going to start sliding them a little bit in, a little bit over here, a little bit over here. Then I'm going to start sliding more and more in as we get into the end of June because that is historically a very good time for the bulls. Okay. And what I haven't shown you is our new money patterns. So we've added some stuff for those of you that are software hounds of ours. We've added in some new stuff recently, and I want to show those to you, and we'll kind of move around in there and see if there's some potential trades as well. Although we've gotten several of them out of tonight already. But for trading these money patterns, what I do is I go back to my tools, and I'm going to go to the money calendar. And inside the money calendar, we've got all these extra tools here that we can look at. So we've looked at money calendar. Money holidays is a really neat tool. And what you do is you go in here and you select any stock or ETF that's in our database. And so, you know, if I took a look at, say, Apple, I'm going to type in Apple, last 10 years, and I'm going to see, well, what does it do after Memorial Day, that over the next 30 days after Memorial Day, over the last 10 years, how has it performed looking at those 30 days? Well, guess what? Apple looks like it typically wants to go down the 30 days after Memorial Day. How accurate is that? Up to 80% accurate. If I go up here and I click the 23 days after Memorial Day, here's what happens with Apple. Now, 2009, it went up. And in 2014, it went up. But these greens are profits. These greens are profitable, showing you as the stock dropped. If you shorted it, that's what you would have made. Okay, that's last year. Here's 2016. Here's the biggest year, which was 2013. And that was just like nice slow coast to the downside. Beautiful pattern you see here. But you can see 8 of the last 10 years, Apple averaged about a 2.5% drop. So if you look at today's prices, 2.5% lower, that's where we are. You could use that information, maybe trade put spreads on it. All right. I've got one for you. Let's see if I can find it here. There, that's not it. Holidays. Okay, so I went in and looked at Amazon, and I wanted to show you right now, not a couple weeks ago when we had the money calendar, but right now, what Amazon shows is an 80% going the last 10 years, the 26 days after Independence Day. So even going into not only what we've got right now going into July, but even into late July, this trade could even go farther. So, if you're looking at June, you're thinking, all right, well, June's one thing, but I wouldn't mind going into July. Why don't we look at July, Tom? Well, let's go ahead and do that real quick. So we'll go back to the stock options, and what we'll do is we'll clear everything out for Amazon. We'll come over and look at July 20th. That's the third Friday. By the way, third Friday, I told you last week, that's almost always going to be my pick because it is the best liquidity. Now let's look at 1700. Now 1700 going to be a little more expensive. It's not $3. It's $21.60. So we're going to sell that. All right. And then, wow, I can't go. I got to go to the 1690s here because I can't do it. The 1680s, it's going to cost too much. So 1690, 1700 for July. What's that going to cost us? It's going to be $333. It's got a wider spread though. Look at that. You're going to be doing this for more like 4 points to make 6. But you can get an idea what that trade. Here's your risk. Here's your reward. But you're giving yourself more time, another 30 days to be right. This is the more conservative trade. And this one too does not interfere with earnings because earnings happen the week following the 20th. So you're not going to run into an earnings situation with Amazon by looking at that. All right. More aggressive trade would be the June trade. A more conservative trade would be the July trade. All right. But that's all based on that money holiday pattern that I wanted to show you. All right. And that's something that we have right there on our new tools. So money holidays. We have something called the Money Calendar Trader. And the Money Calendar Trader is really cool because what it does is it actually does not only will it go through and, like for instance, we look at June 1st and you see Friday, June 1st, and it shows the bullish opportunities. It shows the bearish opportunities on here. But what it does is it does the next step, which is it finds the best option trade. So we can go to Money Calendar Trader. Let's look at tomorrow and I'll click on the search button. And then what ends up happening is here's a trade for tomorrow. And it's looked at UAL, the puts. All right, buying the 72, selling the 67s. All right, buy the 72s for 365, sell the 67s for 131. Let's see what that looks like. Another spread. This is a put spread. You're buying the higher strike put, you're selling the lower strike put. And you're looking at this as a trade that makes money if UAL goes down. All right. Now, for UAL to go down, number one, the market has to drop a little bit. All right. Number two, the price of oil has to go up. Well, guess what? That's kind of happening right now. And so this one is really about a 1-to-1. It's got 113% profit to risk ratio. All right. In the trade, but we're going to need it to drop down. But we really only needed to drop down to where the levels were just a couple weeks ago, and we're in the black. All right. Again, that's the July 6th. 67, July 6th, 72. You're buying the 72, you're selling the 67. Okay. So there's your put spread trade. And that was found again using that Money Calendar Trader pattern that I just showed you, where it goes in. And by the way, if you go back to Money Calendar itself, look at this. Here's your very first bearish trade, UAL. It did the work though. It looked at UAL. It said, wow, last 10 years in a row, this thing's made money on the downside. All right, it looked at that. It looked at the average trade. It looked at the duration of the trade. It added all that up for you, and it puts it into a nice little package here that we see and shows you that information. The latest, the entry open, the target we're looking for, which is 66.46. The target percentage 4.5% down. Okay. It looks at the days to expiration, looks to the days to the money calendar end date, which ends 2 days before the options expire. Okay. We've got pop-up charts we can look at here. Shows me my entry, my break even, what my trade entry date looks like, what my money calendar end and our percent to double looks like. All right. And then lastly, the power meter, which positive is good. So that's Money Calendar Trader all in one shot. All right. We've now made that available for any of our complete traders or higher. So that's another way to spot opportunity. Okay. Let me show you just a couple more. And for those of you that trade Bitcoin, so a couple things. Who in here trades Bitcoin? Say why. Why for yes if you trade Bitcoin. All right. I mined it years and years ago. So I guess you could say I'm one of the lucky ones for mining it. But keep in mind that I did this back in 2013 because I really wanted to understand the blockchain technology and how to mine digital currency. I had no idea it was going to become so big. I never expected that. All right. And now I've gone from Bitcoin and Litecoin and Ethereum and Bitcoin Cash to a lot of altcoins too, the cheaper coins, because I see a much better return potential as Bitcoin goes higher. So let me just show you where you can find it in our tools. So I got two different areas I want to show you. So you could go to stocks and you could go to cryptocurrency. All right. And you can see here, cryptocurrency, just not too long ago, as you can see here, this was the high that it achieved, up over 19,000. Then it dropped all the way down into the 60, well, this is 7,000, but it went to like 6,800. So here's your second area. This is 6,600, excuse me. And then we had a third area, which was a low that bottomed out around 7,000, not just a few days ago. And so we've hit this triple bottom that's come in. And a lot of people I'm talking to, experts and people that have more coins than I do, are saying that they believe the bottom is in. In fact, there's been many a Wall Street trader that have left Wall Street to trade cryptocurrencies because they say they can make more money doing it. But what we did was we have these widgets here. So if you go to stocks and go to cryptocurrency, you can see it at any time what Bitcoin's doing, Ripple, Ethereum, Bitcoin Cash, Cardano, and Litecoin are doing. These are the top 6 by most. They're in the top 10 by volume. Down here, you'll see a chart of Bitcoin, and this is priced at the US dollar rate. You can see latest Bitcoin stories. All right. You can see what's happening with Bitcoin and companies that potentially are using Bitcoin. All right, but that's not what I wanted to show you. What I wanted to show you is the Bitcoin money calendar. So now we have the Bitcoin money calendar. Let me go find that thing for you. So we're going to go over to Tom's Tools. You have to be a complete trader to get this. If you click on the money calendar, you will see the crypto calendar. And the crypto calendar is actually really easy to use. You click on it. There's only one coin in here right now, which is Bitcoin, because that's what we use. That's the alpha coin. That's the one that we want to look at above all others. So I'm looking at today's date. And if I look at the trades that are starting within the next 10 days, look back 7 years, show me the top 20 results, click on show. Green is good. Green shows us that we have, in this case right here, a trade that starts tomorrow that has an 85.7% historical probability of going higher. So there's Bitcoin. You can see the day it starts. You can see the day that it ends. You can see the pattern itself. Look what happened last year in the pattern. Nice move. Now last year, this thing was trading at around 2,000, and it went from what was the low, 23.30 to 29.42. Okay. So that was a good, when you look at that, that was a good 20% higher. I'd love to see Bitcoin go 20% higher from where we are today. That would take us somewhere up to 9,000. All right, what I really would like to see it do is get above and close above 10,000. And it was oh so close the first week of May. And then the bad news just started coming out again. But you know what's happened recently? More bad news has come out, but it just stopped falling. And I learned something from John Najarian long ago. All right. He and I used to teach together with part of Optionetics. And John used to say, when you see bad news coming out and the stock stops falling, that's the time to get in because the sellers are done. And the same holds with anything that has a value. So cryptocurrency, that's our crypto calendar. And you can look here. And I like to see, what I like to see is I like to see all of these green. If it's a mixture of green and red, there is no pattern. All right. But when you see the 12-day pattern and 21-day patterns looking the same, and you see 11-day pattern, they're all green, it's telling us that there's a cluster of patterns that start on one day and end on another, and they're all overlapping each other. And that's what we like to see. All right. So we also have money clocks and crypto clocks. And the way those work is, let's see, I had something set up I want to show you guys. Okay, you know what? I wasn't going to show you, but I'll show you anyway. So these work the same. So I'm going to click on the money clock. The money clock, let's say we were looking at UAL, okay? Remember, we looked at UAL as a potential bearish trade. So if I'm looking at UAL and I want to see what it's done, I'm going to go back to the settings area. So this looks like what it does is it actually ends up looking like a watch. There's my watch. So I could set my watch for up to 60 minutes. I can display the top 20. You could slide these things back and forth. Last 7 days, and I can bring that all the way up to 20. All right, let's take a look at that at 10. So we'll take the last 10 days, and then 65% accuracy or better. If I just type in UAL, click on enter, and you know what this shows me? Okay, it shows me a couple of things. I notice there's a cluster of buying that happens. That's that's just after or just before 10 o'clock in the morning. But then all the selling seems to start happening right around 10:45, 10:50. All right, 10:45. And so I can click on these and I can get some more information. And it shows me, wow, you know what? 9 of the last 10 days, these parts going up. That just shows that UAL is going down during that time frame. This was the only day where UAL went against that short-term trend. But what it does is it gives me an idea that if I want to get long or short something, why don't I go to the clock and find out when the most probable time is to get into that trade long side or the short side. That's called our money clock. Crypto clock does the exact same thing, all right, but with cryptocurrencies. So you can see a good bit of an idea of some of the stuff we have here. Now, I spent the majority of tonight showing you how to create low risk trades and also spot opportunity. And I did that using our tools, okay? Because all of you that have gone in and you've taken a free test drive on our tools, you may know that there are a couple of them that are out here, Option Trader and Contrarian Trader and Complete Trader. And then we've also dropped those prices down where you have them at a special offer off of our regular monthly value. This membership over here has been full. Let me tell you what, this has been full since last year. All right, we've not offered this on its own since last year, but we have now 24 of these that are open. We do not do free trials on our professional trader because it comes with our real-time package. But any of you that are interested in getting it, I'm just going to show you real quick what it is. It's everything. It's Option Trader, it's Darknet, it's Money Counter, all the counters, and it's also our real-time product with our friends at TradeStream. We now have robotic algorithmic modules that are also included. So we show you how to set up, and we actually have some of them already preset for you, so you can go in and have intraday buy and sell signals. Okay, we have support for all of our stuff. We have forums where you get to talk with our team as well as like-minded traders who all have tools. That's the one thing that we all have in common. We all have the tool set. So we're all talking about different scans and different things that are going on. All right, I also include my weekly outlook. I showed you a little bit of the weekly outlook tonight, but that's about an 11 or 12 page review of stocks, bonds, currencies, commodities, and then also we'll go in and we'll look at either a Darknet trade that week, a money counter trade that week, maybe a crossover, whatever it may be at that time. Now, what we're doing for our new folks who want to take us up on this, being in our professional trader, is I am also going to be offering as a bonus the complete home study course with audio CDs, right, that we've put together recently. Those are going to be part of this professional trader package. All right, that's a 4-volume set, a lot of paper. It is a brick. It's not on PDF. This will get mailed to you, all right, along with the CDs. Bonus 2 is we're going to add 200 live webinars in. These are live market webinars we do on Mondays, Tuesdays, Wednesdays, and Thursdays from 2 to 4 p.m. This is myself, Dave Shamans, and Steve Novak, who are professional traders. Also, we have recorded professional members. They get 400 hours of this stuff annually. So you're going to get 400 hours of additional live webinars. So we do this as part of our hand-holding approach to teach you, A, how to use our tools, and B, how to be a better trader. Bonus 3 is that we are adding in, and we didn't do this before, but we're adding in this year, the Bitcoin calendar and the Bitcoin clock. All right, those are going to be added on as part of this program. You know, I could sit here and we've got a lot of these, a lot of testimonials that are out here. Chris has got a nice testimonial. Jen has given us a great testimonial. Bernie's given us a great testimonial. But you know, the fact of the matter is that we don't have a lot of these that come up often. When they do, they get scooped up pretty fast. And so again, that whole package is option trader, Darknet, money calendar, or real-time module with the algorithmic trading modules, that robo trader piece, my weekly market newsletter, member forums, videos, live support. We've got, by the way, videos, we've got probably close to 200 videos. They're how-to videos that have to do with different pieces of our software. We're going to add on an additional 200 live market webinars. That's with me and the team. You get a bonus home study course, and also you get the crypto money calendar and the crypto clock, and those are now out of beta. All right, they are now out of beta. Separately priced, this comes out to be $7,188. What we're doing for 24, it's only 24 people. It was 25, but that's changed already. 24. You get the package for $23.88. What you have to do is go to tomgentile.com/professional trader. Let me put it up on the screen here for you so you guys can all see it. Jump in the chat box here. So www.tomgentile.com/professional trader. Now click on that, and it's going to take you to our professional trader page. All right, this is all the information I just talked about. Also included is something we call Fix It. It can fix nearly any losing option strategy. All right, and we're now starting to add more and more data in on videos on how to use Fix It. But you click on Start Saving Now, go through, look at our terms and conditions. If you agree to them, press I agree. From there, you will then go to our PayPal page. When you go to our PayPal page, you'll see the checkout, and it'll show Tom's Tools annual upgrade subscription, $23.88 each year. You'll be locked in at the lowest price. All right. If you have a PayPal account, click log in, follow the directions. If you don't have a PayPal account, you can pay with a credit card or debit card by clicking just below the login screen. Okay. And so again, that's tomgentile.com/professional trader. So before I get into the homework, Jay, any questions? Turn your mute off, Jay.
Yeah, well, I'm trying to fix my broken mouse to turn the mute off, but yeah, I got it. Recognize, folks, that this is an offer through Tom's Trading Room and Optionetics only, not other affiliated places where Tom writes to and such. This is specific to Tom's company, Tom's online software and education company here. So go That's through right. us to take advantage of this.
Absolutely.
One-time payment.
Yep, it is. And as soon as you're paid, we will get your home study course. That thing is 700 pages, I think. There's a lot. We put a lot into that. And the audios, that's a couple of days, I think, of audios that you'll get there, and that'll be on its way. And you'll be able to within 24 hours, we'll have you activated, and we'll get you going, and we'll get you ready for next Monday. Live with the markets too. So that's the plan. Again, follow the case studies we discussed tonight. We had quite a few. All right. And for those of you that want, there's 24. I keep saying 25, but 24. My full professional trader package is available. Next week, we're going to do a little review, and then we're going to talk about trading earnings. All right. And you might say, why are we talking about trading earnings? We just came out of earnings. Because if you want to follow us like a real professional trader, you don't do what the herd does. You do the opposite of the herd. The herd right now is not thinking about earnings. You know when they think about earnings? When the television tells them to think about earnings. When the internet tells them to think about earnings. We want to start thinking about earnings like in the next couple weeks. And so I want to prime you as to how we trade earnings regardless of market direction. Okay, if you've ever traded earnings, many people that I know are more frustrated trading earnings than not. We're going to teach you how to trade the opposite of those folks. So that's our plan for next week, folks. Any questions, support@tomgentile.com. You're welcome to ask us any questions, regardless of whether it happened to be based on the strategies we talked tonight, or if you happen to have any questions on the offer that we have for my full professional trader package. You can feel free to email us, support@tomgentile.com, and we'll answer your questions there. All right, guys, thanks a lot. I'll see you next week. And until then, have a great week, upcoming weekend. Take care. We'll talk soon. Bye now.